What's going on, you guys? Let me know if you can hear everything. I'm trying everything from just my computer today. No extra monitor. I gotta take care of this little dude. So if you hear any baby noises in the background, you know that's him. Today is Wednesday, the 10th, 2025. We just had FOMC. If you guys were lucky enough, you probably caught me with Max over on his Twitch stream just before this. But we're gonna transition right over into earnings. We've got a few big earnings coming up, but we did want to do a little reflection on what happened in the FOMC meeting, discuss the outlook and all of that, and then see if we can find any interesting positions or anything that we want to monitor, especially after we tend to see some pretty big positions taken right after FOMC and rate decisions. So with that being said, let's get right into it. The first thing I do want to show you guys over here is our fear and greed index. Let's just refresh this real quick. Remember, just about 1 to 2 weeks ago, we were down in extreme fear, down at about like 8 or 9. We're now at 37, so we've pumped back up toward almost all-time highs. We're just a few a few percentage points from that top. Now that we know that we got a 25 basis point cut, now we're looking at the January 28th meeting date, and on here you can see that right now it's actually a 75% chance that we stay consistent, 24% chance that we do cut. So we will have to see if that does change, if there's additional information that comes in that starts to sway that potentially to another cut. But as of right now, what Jerome Powell basically said was that they got to keep an eye on the data. We kind of had to fly blind because we were missing some data from all the shutdowns and all that. And ultimately, they keep talking about how their dual mandate for stable employment and then low inflation, aiming for a 2% goal. I mean, realistically, we've been sitting at about 3 to 4% for quite some time right now. Some projections say we're at like 2.6, 2.7 or so. But again, 2% is their ultimate goal. They do have that projection for, I think after like 2028 or so is when the summary of economic projections showed that they have us back down to 2% inflation. But keep in mind that compounds on itself. So every year that that goes by, that does continue to increase prices overall. Okay. Max, you got anything to say about what we saw?
So today was technically a hawkish cut. Basically, the only dovish dissent was Moran, but if you've seen that Trump is starting to... Jesus, my camera's like in such a weird angle. So if you've seen Trump, his one requirement is if you're going to become the next Jerome Powell, essentially, you have to cut rates like immediately. I know like originally they were planning for 3 cuts in 2026. Getting it slashed down to 1 is probably why we saw a little bit of a pullback. And that's just from the Fed dot plot. But again, that's also from the Fed, not a reliable source, which is kind of like a hypocritical statement. That would be like going to see your doctor and then your doctor telling you that the results may not be final or accurate. You'd be like, okay, so am I dying or not? And they're like, you could be, but I wouldn't put all your eggs into that basket that you are. Now, I will say, as I've been saying for months now, leading up to this any rate cut, IWM was the real winner today. Small caps are the only ones who win off of expected rate cuts like 25 BPS. If you were watching the speech, even Powell came out and he was like, yeah, I don't think a 25 BPS cut is going to change like the circumstances for any type of like average American right now. So he knows that. But also the reason we got so bullish is because the base case is not to hike rates, which has been kind of the fear in the back of everyone's mind. Because in theory, if we wanted to like really bring inflation back to under 2%, we would need to hike rates essentially, and like kind of tank. We'd have to tank a market, whether that's the housing market, the jobs market. I know there's reports of private credit is going to take a huge hit in 2026 right now. It doesn't help that JP Morgan's in some internet beef with MicroStrategy, where Michael Saylor's trying to liquidate them because they took a huge short position out. So there's a lot of factors that are playing into something that should not have this many factors playing into it. And I think that is the difficult position, and that's why we could see a serious, if you've been watching the flow today, everything is for like 2026 right now for the beginning of January, and it's all bearish. It's all bearish going into January, because I think people know if Jerome's setting us up for only one cut, and then Trump brings in I think Waller's the favorite right now. If he brings in Waller is going to do whatever Trump says. So if Trump tells him to cut 50 basis points, even though we might not be able to afford that, Waller will cut 50 basis points. And that's just the reality of the world that we're going to be living in. And I think that's why if you look into 2026, we're seeing a lot of bearishness going into anything that isn't tech at this point. And the only reason why tech isn't bearish is because that's our infrastructure for the next 10, 15, 20 years that's currently being built right now. The only thing in tech that's getting hurt are overvalued stocks that don't have anything to really prove, which kind of takes us straight into Oracle earnings predictions, and I'll let Eric start with that.
Before we do that, real quick, just to show IWM pump, this is about a 2% pump from when the SEP came out to the top of what we saw earlier today. SPY was just under 1% for a move for that. SPY is very close. SPY right now, this white line on the top, that's the all-time highs. SPY is 0.16 from the all-time highs right now. QQQ also just about under 1% when in terms of the move that we saw today. But yeah, just like what Max was saying, Jerome Powell is going to be data driven. He always has. He waits for the numbers to come in. Unfortunately, he was flying blind with the government shutdown that basically took away a bunch of additional economic numbers that he usually uses. As a result, this 25 basis point was basically baked in. But I think realistically, if Jerome Powell had more data and it wasn't favorable, he might have actually just held things flat. I think that probably would have been ultimately, like, for the long run, probably the better course of action to take, because once we cut, and if we cut too big or cut too fast, inflation comes roaring back, and eventually we do have to rate hike sooner or later in order to combat that. Unemployment, it's interesting. Unemployment, they actually say the numbers aren't that bad, and it's kind of cooling. Numbers are still fairly high, but a lot of it is, I would say, more so just like, the jobs that are being lost for some of the bigger companies, those are being replaced, but there's a lot of hiring freezes and a lot of situations where no new jobs are necessarily being created at this point, which is, led to where we are at this point. Another interesting thing is, we are so close to all-time highs. Generally, this is not a situation where you have to cut rates, but in terms of our deficit, in terms of our national deficit of $38 trillion, I think every single 25 basis point cut takes billions of dollars off the table that we would have to pay in interest. So, historically, I've said this over and over, historically, we are in a situation where inflation is really just going to be that next battle that America has to deal with, because we are stuck in a situation where we've already created so much debt for ourselves, and that generally has been shown to be the course of action that any big nation takes in order to deal with those deficits that they've created. in my, let's go into here real quick. In my Discord, in the STAX and ICC Discord, right there. You will actually see I was posting things in real time as we saw. Started off with SPY being actually just a little bit more bearish than bullish as we went into the SEP, the Summary of Economic Projections being released at about 11. We started to see a pump, and as we saw that pump, we started to see the crossing of those calls to win out over those puts. All right, and as the day went on, you can see that we started to see some heavy, 11:30. This is right when Jerome Powell started to get, started to talk. We started to see the heavy call flow come in, and that's what led into a bigger and bigger pump. We broke that resistance, this line of 685 that I had drawn. And then all of a sudden we saw 20 million plus of calls flow in. Now we're very, very bullish on it. And as we did see a little bit of a drop. This is when the Q&A actually first started. Came back down. We had low volume. That led into a little bit of a sell-off. But that resistance held up. And then we started to see a much bigger pump go up toward, and again, we're very close to those all-time highs now. So just to show you guys, if you're in our Discord, we're always trying to share with you guys the information that we see in STAX, open up a conversation. I know some people did get into some calls. We're able to profit pretty nicely off of those short-term expirations. Now I know this is what everybody's waiting for. What's going on with Oracle? And what's going on with Adobe? Throughout today, as we went into, you can say about 11 o'clock is where we started to see FOMC, and we started to see some buys of some calls sold off. But I will say, if you were to just say what happened after FOMC and to be ready for Oracle earnings, it is actually leaning slightly bullish. A lot of these shorter term situations, so you can look at here, if we see the very, the short, the little hourglass in here, that basically helps you recognize that it's a very short term type of play. Within a week, that should be expiring. And you can see they're all aiming for what? 240, 260, 230, 222 and a half. So that one's actually pretty much in the money. But what I will say as well is, if you go look at the expected moves, let me pull this up real quick. Expected moves for Oracle today. This is just from bar chart. You can see the expiration for Friday. Expected move is about 8, almost 9%. So between a drop to 200 or a pump up to 240 about is what is expected for Oracle. Now, let's look at the chart. So, this is just Oracle today. You already saw that it pumped up alongside with the whole FOMC. We are at 224 now. It was up about a 1.5% for today. But I will say there's definitely both a bullish and a bearish case to be made for this. Okay. Number one, the bullish case of it is the fact that, okay, well, we saw this huge, you could consider this a sign of strength moving up. After earnings, last earnings, they popped about, 40%. They closed at about 30% or so after the day. And we've given back all of those gains, and technically even more. You can see we're back at where the not last earnings, but the earnings before, we're back at where those prices were. And it basically bounced off of that pretty hard. So the question here is, if all the expectation for them, for the, the fact that, all right, we've got all this AI infrastructure, we're going to be involved in it, we're going to spend money to do this, blah, 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 and that still holds true, then this is an overreaction to the downside, and we should see this is a great place for it to bounce and for it to head up back. I would say 232 is where I've got my line first drawn, and then if it does hit that, it can head up to 242 and higher. However, what you see right here does kind of have the looks of somewhat of a bear flag, right? So you've already had a small bear flag form right here. That already broke down, rejected, came further down. The only other thing is that there is some decent volume over here, which shows that buyers have stepped in to an extent and pushed it further, right back up. But as of right now, the expectation to the downside is toward 200. To the upside is probably close to 240. So we could probably see anywhere from a 15 to 20 point move up or down. STAX overall, let's pull up our WaveX on STAX. This is the thing that doesn't give me, I'd like to see some more definitive, a more definitive chart here. So on the right side here, we might be blocking this with our faces. Let me move our face. Okay, so a lot of calls and puts both sold off throughout today. All right, now we did make this pump. Is this pump more so related to FOMC and what happened with the Fed, right? Or is this going to be a little bit of a run up toward this earnings, and then we see continued bullishness there that could lead into more? But 16, 17, this is $18 million of calls sold off versus about 5 million of puts. That usually when we have more confirmation of a direction for earnings, we tend to see one of these much higher in the positive range of premium. You got anything to say about this one?
Yeah, I think the only thing with Oracle is they have so many lines of business that it only takes one of them to exceed expectations and do well in order for them to pump. So that is the only thing that makes me nervous. But also, I know they're going to be more of like a sell-off company, and you're going to have a bunch of hedge funds with lower price targets so they can get in cheaper, rather than a company that they want to see pump. Because realistically, the only time it's beneficial when a company pumps during earnings is if you're close to being able to give some kind of stock split. So you have to hit a target. With Oracle, they're very much in a spot of they're building infrastructure, and it's not necessarily, it doesn't even exist technically, like what they're trying to invest into and build into. I mean, I don't know. I'm bearish on Oracle, but that's from the flow and just the fact that I think AI companies are just going to have a rough Q3 report, especially considering most of the stuff they want to do is going to be 6 to 18 months before it hits the bottom line and it becomes a profit or revenue generator, because they have to build it, sell it to customers, and then report that revenue, because backlogs aren't, as we've seen with other earnings reports, backlogs are not enough to keep investors happy nowadays when other companies are showing solid results throughout. And that's kind of where I'm sitting with anything that's AI driven. Adobe, I just think because it's a more customer focused product at the end of the day, as long as they have active users, and then on top of that, any innovation is just a bonus at that point. But with Oracle, it's not about active users. It's about enterprise accounts that are adopting these aggressive market positions you're essentially taking by spending so much of your free cash flow and increasing your debt size quarter over quarter without necessarily having those sectors or departments in this case perform well to give investors confidence. And that's where I get a little jittery about it, because it's all right, well, you can keep spending billions, but you're gonna have to make billions at a certain point. It's like the world's most expensive credit card, basically.
Yeah, I agree with that. There's a lot of this AI hype is all speculation for the future, and I feel that we very much have the theme right now has been overspending to create this, this mirage of value at this point. But the issue that lies within it, and we already see that with OpenAI, is the fact that they haven't proven that they can make that level of revenue. It's not to say like OpenAI can make money. We understand that, okay? But the issue is that the trillions that they've committed in terms of spend, those commitments are like 100 to 1,000x of what they actually bring in terms of revenue. Now we don't know what the next few years will bring with it, but with today's current model, that's not feasible, right? And that's definitely overvalued at this point. We'll continue talking about that in just a moment because we do have Adobe also coming up. And let's actually talk about this one. Adobe, I would say, Max and I had talked a little bit earlier, but we both agree this one's definitely a little bit more bullish than bearish if I were to make a directional bet on it right now. The thing about this is, okay, so WaveX definitely still shows very similar to Oracle, where there's more stuff being sold off than bought. But we do have a whole lot less of calls sold off here, as you can see, just 1.2 mil of that versus 10, almost $11 million of puts on the other end. And the flow does have some interesting, unusual puts being sold at the 307 level. So, they could be saying if it does drop to that level, I'm happy to purchase or grab those shares. Short-term situations that they've gotten, you can see the flow wasn't very heavy of this until we got, 4 prints in today. Not all that much since December started. So the flow is hard to read. Now, the big news about Adobe, and they actually released this today, and here's what I want you to think about it. Why would they release it right before their earnings, right? Why would they all of a sudden tell you? So what the news is that Adobe is partnering with ChatGPT to offer some of their Photoshop services and things like that so that you can just basically have ChatGPT do that for you. So let's say Photoshop this, this ex-boyfriend, ex-girlfriend out of my photo, or, take this person out of my wedding picture, things like that. And so that actually being involved with ChatGPT, that definitely does lead into, more usage of them. I believe in this situation it's probably more data collecting and things like that. Now, how are they going to monetize that? That's the question. The thing about Adobe is the fact that they pivoted to a subscription model quite a while ago, and that's what's really pushed them to these highs. But since 2020, they've really just been in this giant wedge pattern. All right. Now we're at the lower end of it, so and we did break down below just a little bit, and we've returned back in there. So I definitely say that there's more of a possibility that we would head back to the upside. You can also see on the bottom over here, all these earnings have always been positive, with the exception of the end of 2019, right before when COVID did hit. So, my guess, especially with this news, like, why would they release this news and not just include it within their earnings report and earnings call today? Well, this probably just primes the surface so that ultimately when they do talk about it today, they can reveal more that actually gets investors more and more excited about what's to come. So I would definitely say Adobe, more likely head to the upside. Really quick, let's try to get this up here too as well. What is Adobe's projected move? Projected move is only about 6%. So up to 366 by Friday, or down to 324. Okay. So, and that's kind of right where these resistances are, right? Previous resistance down here, if I were to go 330 or lower, right? So we really do have this little range that we could bounce around. But I definitely would say longer term, long run, I would definitely say this has more of a possibility of headed up. not straight up, but realistically probably pop up toward 360. If you buy a few months out, if anything, I wouldn't be surprised to see Adobe coming back up toward this 400 level. You got anything to say about that one, Max?
No, I mean, I think it's just going to come down to like announcements of future kind of future features for that, and then obviously any partnerships will help the case. But I mean, a big thing for them is their monthly active users took a huge hit like over the last year or so as people have starting to tighten their budgets. You have things like CapCut and Canva that
Figma,
people can use for Figma, things that are just a lot cheaper. But with them having like a Chat GPT partnership, and I've seen a lot more commercials for them as well. So I think overall, I bought $400 weekly calls as just a lotto, just to see if what would happen. I also bought 180 calls on Oracle, or 180 puts on Oracle. So I just bought one of each. Didn't go heavy into it. Just want to see what's going to happen, because I think these are going to be two big movers if you catch the right direction. But yeah, I like Adobe more so just because it's less AI focused, even though it is, because they have their monthly active users and promotions that they're running and how many people are active that can always help boost numbers as well. So I definitely think they'll be the winner of the day, hopefully.
Well, we just saw markets close, so we'll see what ends up happening. Adobe sold off kind of hard going into the end of the day, but it held up right where I drew that resistance at 343. It's bouncing hard from there at this point. Oracle held a little bit from where it pumped up to today. We'll see what ends up happening with those, what they release. But again, both companies overall release pretty strong numbers, and ultimately are companies that are here to stay.
Yeah.
It's not like some of these other AI names which don't even make any money. I think these companies just need to be able to announce that they have, some sort of timeline or projection for their future, and it should pump their stock.
Yeah. More so, or I think Adobe, it's more making sure it's for the long term. Oracle, they just need to give people confidence in like what they're actually going to do, because I feel like that changes quarter over quarter. They'll be like, oh, we're focusing on infrastructure, and then next quarter we're focusing on acquisitions. You're like, but what about the infrastructure? Like, so it's just they flip flop so much. I feel like investors can get confused at times with like, so what are we actually looking for from you in the next year? You can't just keep buying stuff and then saying, oh, well, that's our innovation, because it's not. It's the same thing that happens with Salesforce. They go out, buy a bunch of people, and then go, why doesn't anyone see us as bullish? Well, because you're just buying stuff. You're not explaining how is this going to benefit us as a company, as an investor, as an employee, as a business. And because at the end of the day, all investors care about when it comes to earnings is how does this affect the bottom line, and that's why I did the balance sheet course, because that's like what, honestly, that's more telling than what any conference call will tell you, to be honest. If you know how to read a balance sheet and see like what is their freestanding cash flow against their debt and that kind of stuff, it'll give you an idea of like, okay, this is why they're saying what they're saying on their conference call, because X, Y, and Z.
Yep.
Let's see, Oracle.
Another thing, another number to consider is that PE ratio. I will say in the most recent years, in terms of the, for example, I remember seeing Nvidia at like a 60 or 70 P ratio and thinking that it was way overvalued. But one of the things to be, to understand it, so for example, Oracle has a 51, and if you look over at Adobe, Adobe's at 21. a lot of the bigger tech companies at this point are usually valued around a 30 to 40 PE ratio. Obviously, it fluctuates, but anytime that it drops under, I would say anytime it drops to like 20 and under, you definitely end up having buyers, because at the end of the day, those are actually, at that point considered undervalued. Some crazy numbers for right now is like Palantir and Intel have some crazy PE ratios, right? Intel has a PE ratio of 3,800, which means you would need to hold the stock for almost 4,000 years before Intel's earnings would match its current price of a stock. Palantir as well is in the hundreds, 424. All right. So I would say on the higher end of things, it's kind of lost its meaning when it goes up. Because if a company really has good projections for the future, people think that they're going to continue to make more and more money down the line, those PE ratios can go very, very high. But the moment you see a PE ratio drop under 20, especially if it drops under 15 or 10, I would say those are prime situations. As long as it's a company that is strong and set for the future, those are strong indicators that you should probably be purchasing that stock or getting it ready, getting it for something in terms of a long-term outlook. Oh, there we go. Adobe jumped. Called it.
There we go.
Oracle
Woo!
also pumped.
Damn it. my earnings lottos might have just canceled each other out.
But that first move isn't certain just yet. They've come back down a little bit too.
I mean, shoot, 0.72 cost average. Simulated returns on Adobe right now are $1.75 a contract.
Oracle just dumped.
Ooh, there we go. There we go. Come to Papa. Give me that 180 price target. Give me a Lululemon's level dropping,
Lululemon tomorrow too. Man, we called out Lululemon the last two earnings.
Do we need to repeat it? I don't think we missed a Lululemon projection yet.
Adobe's right back at where it was. It's still up, but does it continue to hold?
It just gave back that whole $13 move.
Yeah, Oracle dropping.
Yeah, I mean the Oracle puts are now at $1 a contract, and the average on these was only 0.27 that I got in. Because I had confidence. I was like, no chance these guys beat. Like, Larry has to, first off, is going to have to take some money out and buy his wife another quarterback because Bryce Underwood is not working out at Michigan. There we go. Okay, so I should have a pretty good opening tomorrow. Because Oracle, those are gonna... Yeah, it should be a pretty good day. $1.22 currently on Oracle. Adobe is looking at about $1.50 at these current levels. So Oracle's selling the hell off.
Yeah, 7, almost 8%, 7.5. We'll see if Adobe continues higher. I mean, that's a big wick on the upper end of it.
I think something bad just happened with the Oracle because they came in 51% above expectations and they're still dumping. So
yeah, they smashed their earnings.
Some kind of sector is dragging them down.
There was something about how OpenAI is too big of a percentage of their investment. I think that was something that worried a lot of investors.
Well, yeah, I saw something. OpenAI, if they need to raise like another 270 billion or something like that. But even if they do that, they would still be in the red. Like raising that 270 billion wouldn't even put them like at break even at that point. It would just get them out of like, this is just an over ballooned whale at this point that's gonna pop. And that was like my big tell. And I think that's why Sam Altman gets so defensive when people are like, so how do you like actually make money? He's like, we make money, which doesn't really tell anybody anything. Like, I'm sorry, but Sam, the $20 I pay a month for Chat GPT Plus is not adding that much to your bottom line.
Exactly. That's not helping
I know,
you. That's not helping you raise 1.4 trill.
Yeah, like my friends have the freemium version. They're like, yeah, I'm willing to just wait the like hour for my credits to like restore back to normal. Like I'm not gonna pay the $20 a month. So, like that's about as telling. The only thing I'm nervous about with Oracle is their conference call because if Larry's getting these wives that are under the age that have a 20 to 30 year gap between him, that dude is a snake oil salesman if I've ever seen one. Like a man who's willing to spend $10 million on a quarterback for a school that he didn't even go to, but because his wife went there. Like that's, and by the way, he's not even that good. He's barely, I think he's only broken 200 passing yards like twice this season.
Ooh, Adobe just dropped.
Oh no.
Back at even.
Oh no. Oh, there she blows, matey.
All over the place.
All the way from 362 down. That is a $20 move right there.
Seriously.
Maybe there's... Man.
Oh, that's a good wick. Just scooping up shares.
Yeah. It just shows buyers are willing to step in at these levels at least.
Yeah. Right under where I have my line drawn, too.
But I will say it's really hard to trust a CEO who's been married 4 times. If you need a reason to be bearish on Larry.
Alright, that's a good wick
he's been
for
married.
you. That's a good candle for you.
Let's
look at that wick.
Yeah. That came out nice.
And Oracle looks like it's flagging too. Oracle very possibly could head further down. But I would definitely say, yeah, their conference call, I would expect it to pump.
That's where I think we got the initial moves, and now we just have like auto trade, like auto triggers at this point from the big guys. But that conference call is going to be where we see most of the action occur, because these are both, I like to call them conference call companies. Like you're not really going to know what's happening with them until after the conference call, because that's where you'll get a little more clarity on like what all this actually means, what we can expect, especially going into 2026. Yeah, it looks like we're, yeah, Adobe's giving up the buns, but it also dropped to 340. 378 and saw that nice recovery going into the end of the day. So next big support would be like 338 from the day prior. Yeah, like 338 is where I would see it probably bounce off of. Unless they tank their conference call and then everybody just runs away. But I don't see that happening with 343 shares are at 343 with a price target of 450, down from 460. The stock dropped 22% this year. Wow, yeah, delivered record growth and AI-driven momentum with strong fiscal year guidance for 2026 for Adobe. So happy about that. Their debt might just suck. Because shockingly, getting into bed with OpenAI is not always the best. Is not always the best thing. It does not give investors confidence because they're not even confident on how that company is going to make money.
It was a good thing for a while until they got used and abused.
Exactly. They got passed around and do not have the money to fund those trips. Let's just put it that way.
They turned
It's
into
like the girl who goes to.
Yeah,
I was gonna say it's like the girl who goes to Miami with $100 and is like, I can't believe all this horrible stuff happened to me. It's like, you went to Miami with $100. What do you think was gonna happen? Like,
getting passed around more than community bicycle.
oh man.
Yeah, Oracle coming back. Adobe's basically
Adobe's
flat.
giving it up. Yeah.
But the narrative with Adobe is the fact that if they are integrating with ChatGPT, it softens the blow of them being replaced with generative AI, and they become a part of that process. So, question is, how do they end up monetizing it and not turn into a big black hole just like how ChatGPT has?
That's gonna be the difficult part. Let's see, Oracle.
Also, so tomorrow we've got Broadcom, we've got Lululemon, and we've got Costco coming up. So those will be interesting to see. Broadcom, I would say bullish overall. Lululemon is either going to drop or it's going to come out flat. And I think Costco, I'm biased on Costco. I think Costco is going to smash everything.
Yeah, as long as they don't raise the price of their hot dog, then our economy's in good shape.
Well, they switched over to Coca-Cola products.
Oof. I mean, I respect that. Pepsi's awful. I hate Pepsi. Unless it's cherry Pepsi. That's the only thing that's, like, good.
Anytime I go to Costco, it's always busy as hell there, so.
Yeah. Sovereign? I don't know if they're saying sovereign.
Yeah, Adobe really hasn't moved.
One of the top markets for Oracle right now is, will they mention OpenAI on their conference call? 88% yes right now.
Yeah, Jenny says stock prices after after hours versus the next morning have been very different lately. Play was down after and then is up 13% this AM. They missed on everything. And I love Costco, but doesn't the stock look expensive here? Yeah, it does kind of. I mean, it is pricey. 48 for a retail store, but we do see buyers at this level. So it's bounced off of this level not once, but this is probably the second time that we'll see it. I expect numbers to beat for Costco. You can also kind of take a look here too, like since its all-time high, it is already down almost 20%. So this area is held up pretty strong. It's taken a while for it to get down to these levels. This first drop is kind of alarming, I will say, but it's held up on this line 1, 2, 3, 4. It's below it right now. So do we see it hold up or do we see it break down? We'll take a look over at the flow tomorrow to get a better idea. I'll pull up STAX right now though, see what it says. Costco. Yeah, nothing in particular just yet. We'll have to see what it says tomorrow. Man, look at that SPY. WaveX just 100 mil in calls came in a matter of hours.
Jesus. Jesus Christ.
Alright, well, that was Oracle and Adobe earnings. We'll see what ends up happening with it afterwards. Tomorrow could be a whole different setup. Whole different
Pre-market. Pre-market's gonna be the tall tale sign at this point.
And that's why earnings is always hard. We always tell you guys, be careful with it. Don't full port like some people like to. If you're going in on these hard, you're just gambling with it. Might as well go play roulette.
Yeah, true that.
Alright, that's all I had for you guys today. Keep in mind, if you are interested in trying out STAX, we do have some links in the description box below. You can use the code eRoo Love STAX. Get 20% off your subscription, your membership. We do live streams in our Discord on the daily. Aside from this Wednesday one, this is the one where we jump on here, do a public one for everybody to see, especially if there are some big earnings that are coming up. But every day we do have streams. You also can join Max on his Twitch stream on the daily as well. Always very entertaining. So for example, there was FOMC today, so watched a bit of that with him today. But again, we'll be back on here every Wednesday, right around 30 minutes to an hour before market close. But if you guys hit that subscription, hit that subscribe button on YouTube, hit that like button, and then hit the notification bell. Anytime we do go live, you'll get a push notification to your phone letting you know that we are going live that Wednesday. Alright, I got nothing else for you guys. That was a solid show today. We'll be back at it next week, or if you're on our Discord, we'll see you in our live streams there. Have a good one, guys. Chat with you guys again very soon.